Things looking far better today. We're up 0.6% on the JSE All-Share. The rand still coming under slight pressure. It seems initial jobless claims under the spotlight. Also quantitative easing, the second round of that, and whether it is going to be as aggressive as many are hoping.
Yeah, I guess one could be forgiven when all the talk of the Kiwi2 is around that the size of that big ship is really what we're talking about. But of course, the second round of quantitative easing, big news for next week in particular. And I think the market is getting quite nervous in anticipation of the levels of quantitative easing that would be announced specifically by the US. What we're seeing is that volatility indices, both in US and in Europe, are rising. They're around about 3 weeks highs. And this is really just indicating that the market is nervous. We're seeing the loss of risk appetite, and of course that does affect the South African market from the point of view of inflows, which of course also then affects the currency again. One could be forgiven yesterday for looking at a graph of the intraday trading on both the JSE and the currency market to think that a lot of yesterday's moves were related to Pravin Gordhan's speech in Parliament. But I think it was more coincidental than anything else, and we continue to be driven by the international markets, what are at play there. And I think most importantly, the political issues seem to be driving things rather than either macroeconomic factors or even corporate news results at this stage. So the politics is the name of the game at the moment, and it's going to be who's got the biggest purse in terms of the quantitative easing measures that need to be applied.
Well, Nerina, let's just touch on the fact that the medium-term budget policy statement seems to impress a lot of the investor community out there. I mean, one of the big concerns is that we are going to start accumulating reserves. Do you think this is going to be a negative, given the fact that the rand is still over 7 rand to the US dollar, the dollar losing ground against the euro? So quite interesting to note that we're not actually strengthening in tandem with the euro today.
I think what we do find there is that the talk is a little bit more specific that they would be intervening. Whether they would actually do a lot more than they've been doing in the recent past stands to be seen. I mean, the Reserve Bank has been buying up or improving its reserves and certainly buying up US dollars and other currencies as well. And this has been supported by Treasury anyway. So I don't think there's any real change there. So it's rather the talk about the fact that government is quite vocal about the fact that they do believe that the rand is overvalued at its current levels, and that they believe that it is hurting the domestic economy, of course, particularly in the manufacturing and exporting sectors. So I think what the market is rather waiting for now is to see what would the details entail that will be announced next week by the Reserve Bank when they give us the specifics around some of the forex controls that they introduced yesterday, that they referred to yesterday, but that no specifics were given on. And these specifically would relate to the Regulation 28 for pension funds, which should be announced. The specific mention was made of the government employees pension fund and their reliable investment into not only African markets but also other emerging markets and therefore international markets as well. The only specific that was announced yesterday was at individual level, and some details in terms of the fact that corporates would be, there would be less restrictions on domestic companies wanting to expand internationally and to be able to raise capital. But it was very short on specifics, and I think the market needs more guidance in terms of that before it can really ascertain what the impact on the rand will be. I do think we must just remember that we are a very, very small fish in a big pond, and that what happens to our currency is largely determined by exogenous forces, and that our Reserve Bank and our Treasury can put measures in place as much as they want to, but we certainly do not have the size of purse the likes of that China and the US has, and this is a very, very dangerous game to try and play and to peg some sort of level of the currency. That's not what was said yesterday, but I think the form that the intervention will take is really what will determine the course of action over the next couple of days.
Nerina, with some economic data out today, of course I will be unpacking that PPI number a little later with Davi Red, but just your thoughts on the PPI number that really surprised to the downside. I mean, we're sitting at 6.8% in September from 7.8%, so down 1%, and no real impact coming through in terms of the currency movement.
Yeah, I think that just proves to you how little our local factors actually play a role in the currency market at the moment. A significant surprise on the downside for PPI, and we do know that PPI often leads the direction, not necessarily the magnitude, but the direction of the consumer price inflation as well. And yesterday, of course, CPI also coming in lower than expected. And when we talk about an inflation targeting policy, we tend to always think in terms of maintaining it below the upper band of 6%, but very little is said said about maintaining it above the lower level of 3%, and we're awfully close to that at the moment. And I think the PPI numbers indicate that there's a very real possibility that we will actually dip below that 3% level. So I think when Pravin Gordhan and when the SARB actually talks about the monetary policy measures that they need to put in play, they don't only talk about inflation targeting, they specifically also refer to growth measures that need to be put in place. That was a strong theme in yesterday's speech. And then, of course, also the focus on employment. So for us, it's rather about the coordinated response of government and how they approach this entire fiscus and the different policies that are at play that will determine the health of the South African economy going forward.
Nerina, let's touch on Mr. Price and a good set of numbers that we saw today. Headline earnings per share expected to be between 45 and 55% higher, and that's for the first half of the year. And just looking at the June and July sales numbers, both around 7.5%. So clearly a nice boost there from the World Cup.
Most definitely, and I think it confirms two themes for us that we've seen emerging over the last couple of weeks. The one obviously being the beneficiaries of the strong currency, where you see the likes of Mr. Price that still has not only a huge cost associated with importing of goods, but because of the strong rand, not only is the direct cost lower, but also on import duties. Those are priced at the spot prices, and that certainly has benefited Mr. Price in terms of being able to show a much improved bottom line. But the other very important theme for us here is that in terms of the recovery in the consumer spending, we are definitely seeing this taking place in the semi-durable goods space, and to a lesser extent in the durable goods. It's not happening in the food sector. Of course, food also was more resilient, so it didn't decline as much during the downturn, but we do find that the semi-durable goods is coming off a relatively low base, and we're finding some very, very nice performance
Nerina,
coming through in the
very
sector.
quickly, let's touch on Walmart, Massmart. It seems that Massmart are coming under pressure today after Walmart says that it may scale back its bid for Massmart. Your view on this?
The initial reaction was quite negative, and the share price did plunge by about 2%, but it certainly recovered from those levels. The indication that they might revise their offer from a full offer to a partial bid, still looking for control, so over 50%. But I think bear in mind that the offer is still sitting at 148 Rand per share, which is still higher than what we're currently trading at. So we'll have to wait and see exactly what transpires there. But I think the overreaction initially has already been factored out of the market again.